What about the investment side? We've got a special voice joining us on the show, Vinay Paharia of Union AMC. They have recently released their outlook as well. Vinay is joining us right now on the show. Vinay, everybody is talking about the big rally and the valuations. How is your own assessment? Where do we stand in the market cycle after this big rally under the belt? We are at record highs, global markets are also running, which is making a certain set of investors a little iffy. How are you analyzing the valuations on the fair value curve?
I think what you said is right, that the markets have recovered fairly swiftly from the panic selling we saw in the first half of this year. And now the pendulum has swung completely away from being in the very high unprecedented fear mode to now somewhat in the greed mode. So as we see within our fair value framework, the markets have now started to get into the expensive zone. And we are not saying that the markets are in a bubble zone, but yes, they have started entering into an expensive zone, and hence it's a word of caution to investors to invest in asset allocation products rather than pure equity products.
Vinay, how are you analyzing the biggest area of the market, financials? They may have started moving recently, but compared to last year, they continue to be big underperformer. Weightage-wise, they are of course the largest area of the market. What's your sense here?
Financials, as we entered the pandemic, were expected to be one of the worst performing sectors because they were expected to bear the entire burden of the economic impact of the pandemic. So for example, the job losses which some of the retail borrowers would face would show up in the credit cost. The SME impact was supposed to show in the SME book. So the financials, particularly banks and the NBFCs, were expected to see a significant impact of the pandemic on their books. However, as we speak and as we have seen reality go by over the last 2-3 months, the reality was much better than what was earlier feared. So the overall credit costs have not been as high as it was earlier feared. The recovery in collections has also been pretty robust. So the overall impact on the sector, while it is material, it is still much better than what was expected in the March, April, May period. And we have also turned pretty constructive on the banking and financial services sector as a result.
Right. Let's talk about two areas of the market which has suddenly emerged the favorite of the market, IT and pharma. Both have really come back, in fact surprised many, and everybody wants to latch on to these two sectors. They have in a way made up for all the lost ground because of financials to a large extent. Do you see signs of fatigue here, or you think there is more room for appreciation in these two sectors?
Yeah. So according to us, IT sector is one of the biggest beneficiaries of the ongoing pandemic because the demand curves have clearly shifted on the right, which means whatever was the overall expected demand in this sector has substantially increased because of preponement of IT spends by most of the corporation worldwide. So previously, all the IT spends were considered as improvements, spends to enhance customer experience, spends to improve productivity. But during the pandemic and post that, IT spends have actually moved from just improvements to actually ensuring survival for companies. So IT decisions have now started being taken in the boardroom rather than being taken in by the IT departments of the companies. And that is causing a material increase in expectations for IT spend, not only in this year, but also going forward in the next few years. So we are pretty positive on the IT sector. We think the sector still has material scope for fair value improvement going forward, and maybe we have still not captured the entire potential upside in this sector. So we are pretty positive on the IT sector. As regards the pharma sector, one segment of this sector which according to us is going to see a structural improvement is the contract manufacturing side of pharmaceutical sector, and companies which are going to do manufacturing for MNCs, be it pharma companies or crop protection companies. According to us, those are the companies which are going to see a material structural improvement in their businesses due to diversification of supply lines by most of the MNCs away from China post the pandemic. So once again, within pharma sectors, there are pockets which are undergoing structural improvement, and we are positive on that.
Which are your current overweights and underweights as far as the market are concerned? How have you really positioned your portfolio in these kind of markets, Vinay?
So the top sectors which we are overweight would be IT by far, by a wide margin, followed by telecom and to some extent healthcare. And we would be underweight sectors like consumer discretionary, sectors like utilities, and sectors like materials.
Vinay, what would your portfolio construction strategy be for 2021? The way market has really, rallied, the way overall the macro landscape is shaping up.
If you mean how should a retail investor approach the market, I would say that he should approach it via asset allocation products, simply because these products take away the emotions out of investing. So just imagine, would you have doubled your equity allocation during March-April period? I'm sure no one would have done, purely because at that point of time, most of us were worried about human survival and what would happen to human race rather than talking about financial welfare. So that was this time when we were all scared, but that was the time when the asset allocation products were busy increasing their asset allocation towards equities. Similarly, when markets are a little bit pricier, most of the people all around us are very positive. There is greed all around, but the asset allocation products are busy reducing their exposure to the markets to ensure that when markets become attractive, they can invest more in the markets. So I think the emotions are being taken out of investing, and this is precisely what is the need of the hour for retail investors. We would strongly advocate investing in asset allocation products for investors and not directly invest in markets at this point of time.
Right. All right, Vinay, we'll let you go on that one. Thanks so much for your time today.